maintained profitability, with gross margins moving up from 47% to 50%. In a mouth-watering development, the Zimbabwe Stock Exchange officially listed itself on its own trading platform, an unprecedented move in the country and a bold step that aligns it with a select group of global exchanges that have done the same. Trading on the ZSC kicked off on Friday, the 11th of July 2025. The listing is expected to boost the exchange's visibility, enhance transparency, and make Zimbabwe more appealing to both local and international investors. We engage in a conversation with a capable panelist here on Bid the Market. Bid the Market, to be right back. Don't go anywhere. Well, of course, you're watching Beat the Market, the only show in Zimbabwe that deep dives into everything equities, markets, and finance. Now we take a deep dive into our two stories, starting, of course, with Citco, whose revenue increased by 5% to 124 million United States dollars, with profit after tax climbing 16% to 5.7 million US dollars. The company attributes this growth to a product mix that helped offset stockouts and trading disruptions, particularly in Mozambique, where elections caused political instability during peak selling season. Despite higher operating expenses driven by market expansion and inflation resilience measures, Citco still maintained profitability, with gross margins moving from 47% to 50%. The company's strategic focus on cash generation and deleveraging led to a sharp decline in net finance costs from $5.2 million to $3 million. Net debt to equity improved to 16%, down from 18%, a sign of financial discipline. Inventory and receivables rose as the group scaled up production and experienced delayed sales in some markets. I'm now joined by economist and financial analyst Gladys Mutsopotsi Shumbambiri. Gladys, hello and welcome to Beat the Market.
How are you, Ivan? Good afternoon.
Fantastic. Can't complain. Should only get better. Let's get the ball rolling. What is your overall assessment of the performance of Citco over the period in question?
Thank you very, very much. The overall performance has increased by 5%, as we have given in the introduction, which is a positive move by Citco, based on its maize season, which was a favorable maize season, and also an improved product volume. So basically, the increase in the sales performance was due to increase in product volumes and also a favorable maize season.
Right. Gross margins rose from 47% to 50%. Why is that important?
It is very, very important because this suggests better pricing for Citco. It gives it better pricing power and also an improved product mix, which is also particularly increasing uptake of premium drought tolerant and climate smart seed varieties. But however, we need to look at issues of sustainability. So in terms of sustainability, it will depend on managing competitive pressure, because there's also pressure from the region, pressure from the global markets, in regional markets, and also ensuring that there is consistent demand across all segments of the company.
Right. Finance costs declined significantly, and how important is that, coupled with just how there was an improvement in the net debt to equity ratio of 16%? What does this mean for their operations at this particular point and moving forward?
Okay. The finance costs, they declined due to a debt reduction and also favorable financing terms. So they were favorable financing terms. So the net debt to equity ratio of 16%, it means that it is healthy, and it also gives Sitco greater funding flexibility as a company for its future capital expenditure.
And when you look at the exchange, rather the interest rate regime that we've got in Zimbabwe, of course, we have interest rates that are north of 30%. How does that impact the operations of businesses? Looking at just this classic case of Sitco, which of course had to reduce its debt exposure.
Okay, the exchange rate regime that we currently have, it's a bit challenging for the operations of the company. That is why some of its, in terms of its
Right, in terms of course, where when you look at the breakdown, where the overall market is concerned, perhaps zeroing out of a Sitco, what would it translate to for a good number of listed companies that we've got in Zimbabwe?
Okay, when we look at the current exchange rate regime.
All right, let's move on to the next question. Operating expenses increased. Should investors be concerned about cost pressures eroding margins in the near term?
Okay, looking at the operating expenses that increased, operating expenses, they rose, which contributed to the softer operating margin for Sitco. While this raises a very short-term caution flag, it appears linked to increased distribution. And also, it appears linked to issues of staff issues and also the operational costs, which are tied to expansion efforts. So if these costs are growth enabling, for example, marketing of the new varieties or strengthening the agronomy support by Sitco, they are justified. However, investors should also be watchful to ensure that revenue growth continues to outpace a cost escalation.
But we take a quick break. When we come back, we continue with the operations of Sitco. Beat the market, we'll be right back. Don't go anywhere.
Harare. Tune into the beat.
Capitalk 100.4 FM, your source for news, business, sports, fashion, and more.
Experience the pulse of Harare's culture and lifestyle.
Capitalk 100.4 FM, Harare's top radio station.
Join the conversation with Zimbabwe's top personalities.
Subscribe now for fresh and infotainment content daily.
Capital 100.4 FM, Harare's heartbeat.
Didn't graduate. I guess I blew it.
You couldn't advise him anything. He would just look at you and say, so who do you think you are?
We were just like really spoiled.
And then they just give me the receipt and I'd pay.
The guy walks in one day and then he says that he wants to make a movie.
He was blowing the money.
There was just like this habit that he had where as soon as he got money, it was gone.
I just didn't have the skills or the experience.
This money, I could see it disappear so fast.
Dental checkups, experiments, games.
The mixture is making bubbles and the bubbles have changed color. Our balloon has been filled by carbon dioxide.
We have it all right here on Happy Sprouts. Catch us exclusively on City and Prime, DSTV channel 294.
course, you're watching Beat the Markets, the only show in Zimbabwe that deep dives into everything equities, markets, and finance. I'm Eben Mabunda. We're coming to you from Zimbabwe's capital, Harare. I'm in conversation with Gladys Shumbambiri Mutsopotsi, an economist as well as a financial analyst, joining us right here on Beat the Market. When you look at the operations of Sitco, the capital expenditure came in at about $7.4 million, an indication of perhaps just how confident they are of their operations. What do you make of that?
Okay, thank you very much. So there was an increase in the operating expenses of Sitco, which also contributed to the softer operating margin. So this raised a short-term caution flag. So it appears linked to the increased distribution. It also appears linked to the staff issues, and it also appears linked to the operational costs of the company, which is tied to its expansion efforts as a company. So these costs are growth oriented regarding the issues of marketing of new varieties and also the agronomy support. So they are actually justified, these operating expenses. However, investors should also be watchful closely to revenue growth issues as it continues to outpace cost escalation.
Right. Let's talk about the aspect of climate and climate issues broadly. In 2023, 2024, we saw the El Nino-induced drought that negated on the country's agricultural fortunes. And in 2024-2025 agricultural season, the La Nina, which is the complete opposite of El Nino. And of course, that has sort of turned the fortunes of the sector in its entirety. How important is it for the agricultural sector of Zimbabwe to make sure that they are prepared for some of these shocks as and when they do materialize?
Climate issues are now a very topical issue in terms of agriculture because it has implications on sustainability of the agriculture sector, sustainability of production, sustainability even of profits when we are looking at Sitco, for example. So climate issues are very, very critical. So it has implications on innovation. The companies now need to be able to innovate so that they translate these climate changes to something that is very, very profitable. So companies actually need to be able to mitigate and be ready for these climate changes, such as the El Nino-induced drought. So it's important for companies to actually be able to innovate and also to be able to digitalize so that they are able to be ready for such agricultural and climate changes. So it means in companies, they need to actually have climate policies at their forefront so that they are able to be productive.
Right, and obviously that speaks to the aspect of sustainability and well put out in that manner. Now let's talk about the aspect of financing. Funding remains a challenge for many businesses that are operating in Zimbabwe, be it for their capital expenditure needs or for their working capital needs. May you speak to some of those financing issues as they are manifesting in the Zimbabwean economy?
Okay, financing issues are very, very important because companies, they need to expand, they need to grow. So companies actually need to have a diverse option in terms of their financing strategies. It means that they need to have a strong financing strategy. They need to have different pools of financing models. They actually need to even look beyond Zimbabwe for their financing. There is regional financing. There is also even global financing. And it will also be very, very important for such companies like Sitco to actually seek international credit rating. Right. Because international credit rating will also open up a lot of opportunities for global funding.
Right, absolutely important, especially the aspect of the credit rating. We have seen what appears to be some elements of some companies that have been stepping to the fore so that they ensure that they get that very form of rating. Sitco, back to Sitco, they have operations in Zimbabwe, but they've also got operations in the region. You look at your Mozambique, you look at Zambia and several other countries. How important is that for a company like Sitco to be exploring other regional markets on the continent?
Thank you very, very much. If we look at the Zimbabwean market, it faces a lot of macroeconomic challenges. But when we look at the Zambian market and the Malawian market, it gives Sitco an advantage when Zimbabwe is facing certain challenges. So going regional is very, very important for a company like Sitco, because if you look at Zambia and Malawi, their branches in Zambia and Malawi, they are operating very, very well. So when operations in Zimbabwe are a bit on the low side, the company is leveraging on Zambia and Malawi. So it's important to look beyond the local environment.
Right. Zimbabwe is home to over 10,000 water bodies, and yet about 25% of those are under irrigation. What other forms of cash flow generating, or should I say capital generation, that could be employed by, be it small-scale farmers in Zimbabwe, be it large conglomerates like Sitco, or even the government itself, to ensure that there's adequate funding to bridge that gap in terms of the irrigation infrastructure that we have in Zimbabwe?
Okay. You are talking about the opportunities for these companies to increase their cash flow in their operations.
That's right.
So it's very, very important for companies like Sitco to actually have consistent cash flows. You talked about the irrigation systems that some of these companies are employing. So it will also be very important for companies like Sitco to engage in smart agriculture,
right,
which is going to reduce the cost of doing business. So when they engage in smart agriculture, they are going to cut on their costs, which is going to avail cash and enhance their cash flow. So digitalization and innovation will become very, very important for companies such as Sitco in Zimbabwe to actually have increased cash flow.
Right.
Because when you innovate and when you use more of technology, you are also going to cut on certain costs, even human costs, even staffing costs.
Right. To digress a little bit, perhaps to pick an illustration of tobacco, where we have seen a record output by Zimbabwe. Over 330 million kilograms have been harvested in the 2025 tobacco marketing season. And there are indications that we could continue to see a growth where that is concerned. Now, Zimbabwe is Africa's largest tobacco producer and the world's sixth largest tobacco producer. Why is that important for Zimbabwe's foreign currency generation?
It's important because it's enhancing foreign currency earnings. So when our production is increasing to that high magnitude, it is going to enhance our foreign currency earnings. We are also going to be able to actually do value addition with our own tobacco, and also be able now to sell those value-added products at a premium price. So it's going to be very, very important because it's going to enhance a lot of foreign currency generation, which is important for our economy, which can feed into our foreign currency reserves. And in the end, it will also improve the macroeconomic environment.
Right, you spoke about the aspect of value addition. Of course, I will relay the question to say value addition has become very thematic when you look at the Zimbabwean economy in Africa in its broadest sense. You look at just how the country is exporting the bulk of its tobacco in its raw form. The subject of value addition also becomes very important, but that's not only unique speak to the tobacco subsector. It's a cross-cutting issue that would be relevant where blueberries are concerned, that would be relevant even where mining is concerned, with experts contending that there is a need to invest more in value addition. How important is that, and what strategies could be implemented to see to it that there is greater investment where value addition in the economy is concerned?
There is a lot of need for value chain financing.
Right.
So the financial sector needs to participate in this value addition. So value chain financing is also going to be very, very important to enhance value addition. So we need to see increased participation by financing organizations to participate in the value addition process. We also need to see a lot of players to be part of this value chain, so that we enhance value addition process in Zimbabwe. So financing is going to be a very, very big issue in the value chain and in the value addition process.
Right. Speaking of financing, we take a quick break. When we come back, we look at the ZSE listing on the Zimbabwe Stock Exchange. Beat the market, to right back. Don't go anywhere.
Captain Wally J's about to take you to boot camp.
It's the riveting science and tech show that keeps you up to date with the hottest gizmos on the block and revealing the illustrious and innovative visionaries in Zimbabwe. So much to see, you'll keep swiping.
This cherry red beauty is the Dairy Auto M7 mini electric car.
They've designed our brute force incubator board.
Look at what we've got here.
Solar powered scarecrow was part of the project that I was supposed to complete.
Catch Swipe every Tuesday at 5:30 p.m. on ZTN Prime, DSTV channel 294. Get the picture? In a world where music transcends boundaries, where rhythm and melody unite the hearts of people, comes a show that celebrates the power of music like never before. Get ready to dive into a sonic journey that will leave you mesmerized and yearning for more. Welcome to the captivating world of Z-Vibes. Vibe to it, baby.
You are watching Beat the Market, the only show in Zimbabwe that deep dives into everything equities, markets, and finance. The Zimbabwe Stock Exchange officially listed itself on its own trading platform, an unprecedented move in the country and a bold step that aligns it with a select group of global exchanges that have done the same. Trading in ZSE Holdings kicked off on Friday, the 11th of July 2025. The listing is expected to boost the exchange's visibility, enhance transparency, and make Zimbabwe more appealing to both local and international investors. By joining the ranks of listed companies, the ZSE commits to the same governance standards as its peers. And of course, the peers would speak pretty much to other bosses on the continent, the likes of the Nairobi Stock Exchange, the Johannesburg Stock Exchange, the Dar es Salaam Stock Exchange, of course, the list being interminable. I am still in conversation with Gladys Mutsopotsi Shubambiri, an economist as well as a financial analyst. Now, Gladys, how important was the listing of the Zimbabwe Stock Exchange on the Zimbabwe Stock Exchange?
This was very, very important because the ZSE has moved from being a private company to a publicly owned company.
Right.
So this becomes very, very important because it enhances transparency. It also enhances governance issues because we are saying the ZSE is now abiding by its own rules. So this listing is very, very important, and it is actually a positive move for Zimbabweans should the ZSE abide by its own rules.
Right, and how important is that for investor confidence where the Zimbabwe Stock Exchange is concerned?
This will also enhance investor confidence. It will actually cause more investors to come on the bourse, because we are saying the ZSE will also now be abiding by its own rules that it has given to other listed companies. So by itself listing on its own exchange, it is going to bring a lot of investor confidence. So I believe it is a positive strategy that they have just done.
Right, and how relevant is it that they are moving on to align with international trends, international standards, and moving in line with their regional peers?
I believe it is very relevant because we are saying that Zimbabwe is now also following international standards. Because if we look at the London Stock Exchange, it is also listed on its own exchange. If we go to the region, South Africa, the Johannesburg Stock Exchange is also listed on its own exchange. So we are saying Zimbabwe is also going global, is also following international standards, which is also going to enhance investor confidence. And we will see more investors coming on the ZSE.
Right. How can Zimbabwe's capital markets help ring-fence foreign currency receipts and attract sustainable offshore capital? And what regional models could Zimbabwe perhaps learn from?
Come again?
Right. How can Zimbabwe's capital markets help ring-fence foreign currency receipts and attract sustainable offshore capital? And what regional models could Zimbabwe learn from?
Zimbabwe could learn from models such as the models in Nigeria. Mm-hmm. It could also learn from models like the Johannesburg Stock Exchange.
Right.
Yeah. So if it looks at those two, the Nairobi Exchange and the Johannesburg Exchange, I believe the Zimbabwe Stock Exchange will be in the right direction.
Right. We have seen what appears to be depressed activity on the Zimbabwe Stock Exchange, particularly where the all-share index is concerned. And we are looking at a situation of the tight liquidity that's in the economy. May you give a comment on that?
Okay. When we look at the issues of the all-share index and given the issues of the tight liquidity that we have in the economy, it will speak to the issues of the hedging behavior that is there in the economy. So because of the volatility, people want to hedge themselves to stay away from the inflationary pressures that are in the economy. Also, we are looking at issues of strong performances from consumer fencing and also export-oriented counters. So all these issues are speaking to the all-share index. And also, there are issues to do with increased local investor participation.
Right. Gladys Mutsopotsi Shumbambiri, an economist and financial analyst. Thank you, Gladys, for joining us on Beat the Market.
Thank you.
Fantastic. And of course, that's a wrap on Beat the Market on a Wednesday afternoon. Do follow us on our social media handles, Zim Papers TV Network, as well as at ZTN Prime. Your views and your thoughts are important to us. Remember to catch us every weekday at 2 p.m. Central African Time for the juiciest business stories in Zimbabwe, on the continent and beyond. I'm Eben Mabunda, the money man. Let them do what they do. When we do what we do, we mean business. Thank you for watching and have a good day.
Dental checkups, experiments, games.
The mixture is making